I want to go back and talk about yesterday's market swoon, everybody, with John O'Donohue. He is the head of equities at Cowen Co here in New York City. John has been on the street for 30 years and says yesterday was probably one of the most scary things he has ever seen in the markets. John, talk to us about what it was like on the Cowen trading floor yesterday when we saw the Dow down 998 points.
I think, Eric, you have to step back a bit and think how the day was progressing before, that sort of hour between 2 and 3 o'clock really got things going. But the market itself has been looking for an excuse to sell off probably in the last few days or so. And then, obviously, with the constant screening of Greek rioting on a daily basis on trading floors for the last 2 or 3 days, it hasn't helped the situation. But I was around 2:30. Between 2:15 and 2:30, the downside move started to accelerate, and for those of you that look at Bloomberg charts, the GIP, the GIP, which is the intraday chart, a lot of folks look at, you could see this thing just went straight off a ski slope, so to speak.
It was truly breathtaking, John. I mean, do you have any idea what happened? You just said that the markets have been looking for an excuse to sell off. We saw some pretty serious declines earlier this week, but nothing like what happened middle of the afternoon yesterday. In your mind, was it technology to blame? Was it a fat finger? Do you have any idea?
It could be, D, all of the above. I think what has happened in our marketplace is that, the ability to move stocks or indices fairly quickly is indicative of a depth market that has kind of gone away from the old-fashioned market that we all used to know. So, what happens, especially in times like this of uncertainty, is as one tends to move the market in a certain direction, you get a lot more people jumping on the bandwagon. And don't forget that there's a lot of programs that are built, algorithmic programs. There's a lot of programs that are built from a quantitative standpoint that when markets violate certain levels, you tend to get not what would be seen to be buying on weakness, but you get actually additional selling as markets go down. So the move actually becomes much more exacerbated.
John, very quickly before I let you go, do you have any idea who the big winners were?
It's hard to tell. I mean, even a firm like ourselves, who are market makers, on a fairly consistent basis, we have to come in this morning and try and reconcile our books with within the guidelines with which NASDAQ and the New York Stock Exchange produced, which are trades outside of that 60% band are going to go away. But I would think a lot of folks are going to sit down this morning. Some folks in Washington, D.C. may be sitting down this morning to talk about how market structure has changed so dramatically.
Well, John, good luck sorting through all the paper. That's John O'Donohue, head of equities at Cowen & Company, talking to us about yesterday's big drop.